Good afternoon, and thank you all for joining us today. I am NIN.VC, and I will be your host.
Hello, thank you.
Let's start with my background. I started my professional career at Merrill Lynch with their private client group. At Merrill, we manage portfolios of high net worth individuals. While it was great to trade stocks and bonds, I was always curious about how these companies went public. Just after business school, I joined Pacific Crest Securities. PCS is a tech-focused investment bank with a global presence focused on software, communications, semiconductors, and internet and digital media. Here are a few transactions I worked on at PCS. In 2005, IPOs were at the peak, and it was amazing to take all these companies public. But that led to another question: how do VCs know what companies to invest in and which ones to take public? Thus, I joined Alpha Capital Partners. Alpha is a generalist fund with about $135 million of assets under management. My most recent transaction at Alpha was Circon, a software as a service provider company. During my time at Alpha, I realized how inefficient the fundraising process was, not necessarily at Alpha, but in general. At the same time, turmoil in the market led to a change in the way businesses were done across all industries, and many startups sprung to life. On the other hand, venture funds that would invest in these startups were on a decline. The traditional sources of funding for a venture fund, that is pension funds, endowment funds, institutions, etc., were drying up. And that's where Jobs Act or crowdfunding stepped in. President Obama signed the Jumpstart Our Business Startup Act, or the Jobs Act, on April 5, 2012 to promote entrepreneurship, create jobs, and in return, boost the American economy via crowdfunding. So what is crowdfunding? Crowdfunding is a practice of funding a project by raising contributions from a large number of people, typically via the internet. NIN Ventures is one of the first funds that is offering its membership interest under the Jobs Act and Regulation D of the U.S. Securities Act of 1933. The offering is being made available via general solicitation and general advertising, which is permitted by Rule 506C as contemplated by Title II of the Jobs Act. This rule came into effect September 23, 2013, and we were the first fund to go live with a website and videos about our fund. NIN Ventures also became the first venture fund to be seen on a billboard, which was followed by in-taxi ads and other social media and target-based internet advertising. Recently, Wealth and Finance International magazine awarded us as the best technology venture capital fund in Illinois for the Alternative Investment Awards 2015, and the best crowdfunded technology venture capital fund in U.S. for 2015 Fund Awards. In general, the crowdfunding industry has grown from $16 billion in 2014 to an estimated $34 billion in 2015, and is doubling or more every year. The market is flooded with various types of crowdfunding options like donation, reward, lending, equity, royalty, and even hybrid versions. The two most popular types of crowdfunding methods are reward and equity. For reward-based crowdfunding, entrepreneurs pre-sell a product or service to launch a business, and sometimes even in return for gifts or thank you notes. For example, Pebble Technology Corporation used Kickstarter to raise $10.3 million in order to develop the Pebble smartwatch and pre-sold it to contributors. For equity crowdfunding, the backers received share of a company, usually in exchange of the money pledged. For example, Neil Young used Crowdfunder to raise $6 million in order to continue development on Pono Music. In case of NIN.VC, it will be limited partner interest in the NIN Ventures Technology QP Fund. Thanks to crowdfunding, a number of groundbreaking technology companies have come to life. This is especially true in the virtual reality space. Some of the success stories include Oculus, a virtual reality headset which raised $2.4 million, Avegant, which raised $1.5 million, and Secret, which raised about about, I would say, with the help of 7,000 backers, and PayPal raised money for their latest round. However, there have been considerable amount of companies that have fizzled out, largely due to malfunctioning devices, lack of management, customer service, production hurdles, and follow-up financing. Some of the failures include V-Race headset, virtual reality headset, which raised $100,000, and VR, which is an all-in-one VR kit, and managed to raise $260,000, and 6sense, a wireless virtual reality motion controller, which raised $600,000. Now the question is, if one can invest in these companies directly, why opt for NIN.VC? What's the difference between direct investing in a company using a crowdfunding portal and NIN.VC? Number one, diversification. As a fund, NIN Ventures Technology QP Fund makes multiple investments in companies in different sectors, that is 3D printing, cloud computing, education software, during Series A and B round financing. This strategy helps diversify the fund's portfolio, which is not the case when one invests in a company directly. Think of it as investing in a mutual fund versus stock. Second, low risk. Given the diverse portfolio, the fund reduces its risk, whereas direct investing in a company exposes that investment to a higher degree of risk. An appropriate analogy would be to put all your eggs in one basket. A logical follow-up argument would be, what if one makes multiple direct investment in companies of their choice using a crowdfunding portal over investing in NIN.VC? Good point. Given 90% of the startups fail, even if one invests in several companies via a crowdfunding portal, it slowly becomes a numbers game. That is quantity over quality. On the other hand, the fund manager or management invests in an entrepreneur because entrepreneurs build companies and not the other way around. We, NIN.VC, or any venture fund, not only provide adequate financing, including follow-up financing round and access to our syndicate partners, but also lend our domain expertise and network of partners to help companies with recruitment, PR, marketing, and also help draft a viable exit strategy. Third is professional management. Direct investing in a company requires expertise, due diligence, constant follow-up, and/or monitoring. On the other hand, NIN.VC acts like a financial advisor and works for the investor in the fund's best interest. The fund also provides quarterly audited financial statements to all its investors on the progress of the fund. Fourth, an important key point is board representation. A $1,000 investment in a company using a crowdfunding portal does not give an individual enough rights, while as a fund, we take board seats in all our investments. Thus, we are in the loop with the company management when it comes to keeping tabs on the progress of the company, and are in a position to help and make suggestions on several occasions. And also in a position to gauge, be a part of the valuation process when it comes to address valuation during flow financing round. Which is a very important point that corporate investors miss. Number 5, liquidity at exit. When one invests in the NIN Ventures Technology QP Fund, they are locked in with the fund and the management for 10 plus 2 years. Redemptions are extremely rare, and liquidity happens as and when the fund makes an exit in a company via an IPO or M&A transaction. On the other hand, investment in a company can be offered in the secondary market for a transfer of ownership, but valuation, timing, and the choice of investment dictate that transaction, which often doesn't work in the investor's favor. Now a little bit about the fund. What will NIN Ventures Technology Fund invest in? The fund will invest in Series A and B round of disruptive technology companies and write checks anywhere from $1 to $5 million based on the industry and sector. What is disruptive technology? A disruptive technology is an innovation that changes an existing industry, also helps create a market and value network, displacing an earlier technology or a way of doing business. Every sector at some point is up for disruption. Currently, our focus is primarily on virtual reality, financial services technology, education software, internet and digital media, mobile communication, cloud computing, 3D printing, and other path-making sectors within the United States. Our goal is to invest in the next big trends within these sectors. For example, 3D printing. 3D printing has been used for rapid prototyping and is being applied in a number of industries today, including manufacturing, automotive, consumer, aerospace, defense, and especially healthcare. As the accuracy in materials market has improved, there is great potential for this technology. However, the basic question is why venture capital and what is our strategy? Our strategy is to invest in early to growth stage of these disruptive technology companies. If you notice, from 2002 to 2012, technology investments have dominated the venture capital industry. And the highest amount of venture capital funding occurred in the early to expansion stage companies. If you notice, from 2002 to 2011, sector-focused funds have tended to outperform generalist funds. And technology sector has outperformed the rest of the U.S. venture capital index, with early and expansion stage companies yielding the highest returns. Given all that, NIN Ventures will invest in early to growth stage disruptive technology companies. We not only provide adequate financing, but we'll lend our domain expertise and network of partners to help companies with recruitment, PR marketing, and exit strategy. The strength of our team, the value of our network, and our funding model that's designed to reduce management costs creates this unique investment offering. Not only that, we bring a fresh vision to technology investing. Another important question is why venture capital when you can invest in other asset class? Historically, if you look at U.S. Venture Capital Index and S&P 500, you will notice U.S. Venture Capital Index tends to outperform S&P 500. And not only that, they have an inverse correlationship. So what does that mean? For example, your traditional portfolio consists of 70% stocks, 20% bonds, 10% money market investment. With the addition of venture capital, your portfolio can now be 60% stocks, 20% bonds, 10% money market, and 10% venture capital investment. The addition of venture capital will not only help you diversify your portfolio, it will help you mitigate the risk given the inverse correlationship between S&P 500 and U.S. Venture Capital Index. Take Harvard and Yale, for example. They're the biggest and the best performing endowment funds. Their long-term approach and investment alternatives like venture capital allow them to achieve true diversification and help mitigate the risk involved in having only a stock bond portfolio. With NIN.VC, you too can invest like Harvard and Yale. So who can invest in the fund? Recently, the SEC approved Title III Jobs Act equity crowdfunding for non-accredited investors, which allows any U.S. citizen, regardless of income, to make direct investment via a crowdfunding portal. However, investment in funds like ours is still limited to accredited investors. One must be an accredited investor and verify themselves as an accredited investor before they can invest in the NIN Ventures Technology QP Fund. An accredited investor is an individual with an income of more than $200,000 per year or a joint income of $300,000 in each of the last 2 years, or has a net worth exceeding $1 million each individually or jointly with his or her spouse, excluding the primary residence. For an entity, any trust in total excess of $5 million qualifies. There are multiple ways to verify if you are an accredited investor. For an individual, it's income, asset, and third-party verification. For entity, it's assets and third-party verification. Credentials is our most preferred third-party verification method with a simple and confidential process at a click of a button. There are multiple ways to invest in NIN Ventures Technology QP Fund using your checking or savings accounts, defined benefit plans, self-directed IRA, and even digital currencies like Bitcoin, Litecoin, and Dogecoin. Now let's go through the investment process step by step in detail. The first step is to visit NIN.VC and sign up. Sign up is simple. First name, last name, email, password, and acknowledge that you are an accredited investor. Once you sign up, you get access to our marketing materials, that is PPM, investor presentation, and other suggested reading. You get invited to attend our events and calls like this one. You can also schedule a one-on-one meeting with us at our office or online via Skype. Once you decide to make an investment, accept the risk and disclosure statement that will explain what venture capital investment is. The next step is to verify accreditation. Once that is in order, it's a matter of filling out subscription document and a W-9 form on NIN.VC. The last step is payment, and it's as simple as selecting the payment method and the amount you wish to invest. Please note that venture capital is a high-risk, high-reward investment vehicle, and we strongly recommend reviewing our other suggested readings on our website before making any investment decisions. On that note, we're open to questions. Please type your questions in the chat box, and we'll make sure we'll answer them all. So the very first question is, how do portals manage deal flow? So if you go to a regular crowdfunding portal, you'll probably see a gazillion deals being marketed on the portal. Typically, the portal will have a deal flow committee that could include people with PE or non-PE background that are responsible for selecting a deal. There are lots of, the market is flooded with entrepreneurs looking for money. So I believe the deal flow committee decides what sort of deals go live on the portals. As far as NIN.VC is concerned, we personally go through all our deal flow every week. So the management or us kind of decide what deals we will be doing. And if you notice, we all have private equity and venture capital background and are well qualified for that position. How do you address dilution, and what is venture capital value add? This is a very important point that a lot of crowdfunding investors are missing. Is first of all, entrepreneurs need follow-up financing, which is very rare, which is probably a very rare occurrence when you market your deal on a crowdfunding portal. Not only you get hurdles for raising the money in an X amount of time, you also end up with a complex cap table. And if and when you plan on doing a follow-up financing round, your investors oftentimes have to face dilution, and they don't quite understand the concept of dilution. And whereas when we as a fund invest in a company, we take a board seat, we are involved in the valuation process, and also are in a position to do follow-up rounds, which kind of adds an important I would say, which is an important factor, especially when it comes to dilution and valuation. As far as VC value creation is concerned, I cannot stress enough on this. We not only provide follow-up financing, but we also give entrepreneurs access to our syndicate partners for additional funding rounds. We also help companies with recruitment, sales, PR, marketing, and a viable exit strategy. Which could be an IPO or an M&A transaction, which is extremely, I would say, important when it comes to, helping young and upcoming entrepreneurs that are raising money on this crowdfunding portal. How important is follow-up financing for companies? Follow-up financing is very important. Like I just mentioned before, a lot of entrepreneurs raise their first round, or I would say maybe a Series A round using a crowdfunding portal, and oftentimes are left out when it comes to, and those investors oftentimes disown, I would say, those companies and entrepreneurs because they're not seeing any returns, and I believe then the entrepreneur starts looking for Series B funding from venture capitalists, and most of the time these venture capitalists don't want to invest in those deals because it has a messy cap table. So So I believe when you are raising money using a crowdfunding portal, it's very important to maybe form an entity. So if you plan on raising a follow-up financing round, it kind of works for the investors and the venture capitalists who plan on being in the who plan on being in the part of the deal, I would say, in the future. And oftentimes, for example, I just mentioned about the virtual reality companies that had certain malfunctions and could not deliver products on time. Part of the reason was follow-up financing, and since they were not delivering those products on time, it was very hard for them to raise a follow-up financing round. So follow-up financing for companies and entrepreneurs is really important, and which is something I think the crowdfunding portal should address, and entrepreneurs should keep in mind before heading that route. Any other questions? Once again, thank you for being on the call. Sign up on NIN.VC to begin your investment process now, and feel free to reach us at contact@nin.vc or 312-953-0930 to schedule a one-on-one meeting or with any other questions or material requests. Have a wonderful day and happy investing.